A choppy session on Wall Street Thursday. The market's bouncing back after a sharp morning drop. Well, let's see what's in the cards for this month. We're joined by Hillary Kramer. She's Chief Investment Officer at Kramer Capital Research. Welcome back, Hillary. So the Dow dropped 335 points after that ISM services number came out today. Growth slowing to its lowest level in 3 years. Why the sudden turnaround in investor sentiment with the market bounce back?
Because there was a comment regarding trade with China, because so much of the ISM manufacturing number from 2 days earlier, which was a second month of contraction, is based on manufacturers saying we don't know what's going to happen with international trade, tariffs, who's going to be buying from us. Even with Europe, there's concerns and issues going on. And of course, England has its own mess, having to renegotiate everything. So as soon as we heard that China, that on the horizon there might be a trade deal, the market came right back up. Plus, we were to a great extent kind of oversold for where we were in the market. We have this this floor that we get to deal with. We don't really have to worry about falling that much because we have the Federal Reserve, which keeps cutting rates and will certainly now cut rates again next month.
We're not seeing the exuberance, on the other hand, that we see towards the tail end of bull markets with IPOs.
Right, because the investor can only take so much stuff down their pipeline. And when it really comes to these IPOs, Uber, Lyft, Slack, now we have WeWork that actually filed to pull their IPO. What's the reality here? If these companies came out at a valuation a tenth of where they really should be, yeah, of course we would all be buying. It would be really exciting. But there's all this money that crowds in, early and keeps going for all these pre-IPO rounds. And then the expectation is we'll get it public, and everyone, even the last people that got in the door before the IPO, they're going to get rich. And it doesn't happen that way because we can only take the investor, we can only take so much unfair, lofty valuations.
And Hillary, in these volatile, choppy times, this is October after all, what stocks would you recommend investors get into at this point?
I am so bullish on these stocks that are income producing, but where the underlying company itself is undervalued, underloved, fallen angel, unrealized. So you want income, but you don't want it from like a highly, a company with a lot of debt that they're going to have to restructure. I like some of these older companies that have been around and will be around, like Ingredion, which is the old corn products. It used to be the old CP, INGR. Ingredion, it's basically, your sugars. It's in everything, from cereal to chewing gum, it's even used in industrial products. So a company like Ingredion has a place everywhere and a high dividend yield. I love Domtar, UFS. Domtar is a paper company, founded in 1856, in fact, but is the #1 player in the absorbency market, which is, hey, the trend is your friend, okay? The good news is we're going to live to be 120 years old, but absorbency will be important, not just on the young side, but on the older side.
In Japan, actually, it's those adult diapers that are outselling baby diapers right now. Maybe that's going to happen here in the United States as well. Well, thanks a lot, Hillary, for your thoughts. Our thanks to Hillary Kramer of Kramer Capital Research. I'm Fred Katayama. This is Reuters.